Hello, everyone. Hi, Irina, Ren, Kevin, how are you? TJ, how are you, buddy? Alexandra, Brock. Welcome to Face, Mo. Okay. All right, so we still have this breakaway gap here in the dollar. I'm going to call it a breakaway gap until it's filled. Almost reminds me of what the euro did on the Macron victory, which led to a pretty good rally.
Hey, coach, you got a black screen.
Oh, thank you, Stel.
Good morning, man.
Lots on my mind, man. A lot on my mind. So anyway, see this gap here, guys? So, you know, sometimes gaps aren't filled for a while. You would think with the dollar, there's enough bears out there to fill it, but I'd be careful about being, you know, shorting it here, looking for a gap fill, because sometimes they, you know, they don't get filled, especially if we get some pretty good continuation and take out these moving averages. And you know, you look at the daily and it looks like nothing has happened here. And for the month of January, for it to have a 2-month reversal down here, I was talking about 91.88. So still a possibility. Now, if they do fill the gap and pull back, you see this, we have some confluence at 90. So I expect some support between 90, 89, 80. You could just do your fibs, but doesn't have to. Could keep going. This was probably the surprise of the day. We rallied back to the breakdown and then just blew. You know, this looks okay. You know, I can't find a reason to want to short cable up here. Not at this point. You know, now you have old resistance is now new support. Should we pull back to this blue line? Could use this blue line like as a pivot. Above it, you want to be long. Underneath it, you want to be short. If you want to take a screenshot of this, you could do it. We're getting some upside in the S&Ps. But again, here's this bull bear line. Yeah, I drew this line Friday before we tagged it. You know, we had that late sell-off, and then it came right off this line, tested it again yesterday and bounce. The character of this bounce compared to this, and the fact there wasn't much follow-through, sure, we could eke out another high, but I would not be long risk under these highs were actually 37.85, 85 here. And this was 84.20. So, you know, 84.85 back under this. I think we could see some pretty good risk off. It is a turnaround Tuesday. So be careful, you know, if we get some type of sell off. I think you have to be careful about risk right now because the FBI put out a letter or a directive that their intelligence is saying exactly what the crowds from what happened in DC last week are planning from the 17th to the 20th to go into every state capital starting, I believe, on the 16th or 17th, armed. So stay wherever you live, stay away from your state capital. You know, here at Sacramento, it's pretty far away. I think in Arizona, Phoenix is the state capital. So, Blake, you know, don't be driving around downtown Phoenix today. And so,
you know, the thing about I was talking to the guys that I trade with, and they're in, you know, they're all in New York,
East Coast.
East Coast. They're in Connecticut. And they're like, and I have to explain to them, the world I live in is a completely different world than where you live. I'm like, I live in the Wild West. I mean, you can literally walk around here with a gun on your hip, loaded, and if it's not concealed, you're fine. You I keep a 9mm on my desk with
Yeah.
hollow points. I mean, that's just kind of the world I live in. You know, it's not, I mean, it may sound strange to a lot of people, but that's just kind of the way it is. And, you know, we live in a different space over here where, you know, the guys in the East Coast are like, oh, man, I can't even imagine that. I'm like, yeah, I went to go buy ammunition so I could go shooting with my son to shoot a little 22 caliber rifle, which is, I mean, the ammunition's so cheap. Normally I could buy like 500 rounds for $20. And, you know, it's almost like a BB gun, basically.
Yeah.
And,
anyway, I think it's pretty. Yeah.
I mean, ammunition was sold out like everywhere. I couldn't buy those rounds this weekend. Like, and
Wow.
it was crazy. Ammunition was sold out all over my area. Nothing.
Yeah.
And
I wonder what it's
assault
like
rifles were flying off the shelves like crazy, and that's scary to me. You know what I mean?
Yeah. Yeah. You don't need an AK-47 for self-defense, do you?
No, but you know, the other thing about being in an armed area, you know, you might think, oh my gosh, you know, people go crazy and they're going to start shooting everybody. And it's the one thing that you fail to think about is
everyone knows everyone else is armed.
Exactly. And that's the key. You know, you go into like a New York area and, you know, guns are not permitted and you have a gun. You know, the chances of you being shot back at are slim to none. You walk around with an AK-47 or something and you start firing, you're going to have like 1,000 people firing right back at you. And then, you know, you're going to die. So it's, you know, that's the difference. Everybody's armed, you know, it's like, you know, unless you really got a death wish, you're not going to, most people don't, you know what I mean? Most people don't have the quote unquote death wish, you know?
Yeah. Rick is saying there's no ammo anywhere. Where are you from? One of our attendees.
Oh yeah.
Yeah, there's no ammo anywhere.
Oh yeah, I'm sure I'm not a
yeah. Okay.
Un-
Anyway, you know,
Yeah,
that's
so anyway.
just something that's on the country's docket for the next week or so.
Yeah.
And, well, you know, New York, they don't carry guns because they shoot you in the markets. So they use a financial weapon instead of a pistol. So I think I've covered you know, what I wanted to talk about. And you know, I think really the feature is, until this is negated, is this gap that we left yesterday. You know,
yeah,
they could fill
and
it.
I want to mention that actually, Dale, you talked about the gap in the market, and you're right, absolutely right. The gaps can stay open for a long time, and it's entirely possible that I believe, and I said this yesterday, I really believe that the dollar index, this gap that we saw, is going to be filled at some point. The question is, and this is what I think, is I think we go up here first towards, you know, 91, 92, before we go back down and fill that gap. But that gap will be filled at some point. The only way, I'm just going to say this out loud, the only way the dollar gap isn't filling is if for some reason today we're at, you know, 20 or 3,800 in the S&P, and later this year we're at 2,500 in the S&P, and we never go back up from this point forward. I mean, if that's the case, then the dollar index may never actually fill that gap. But the chances of that happening are not really high. I mean, you know, we're going to probably see a gap fill at some point, and so I don't dismiss that at all. So good morning, Stelios. How are you?
I'm very well, thank you. Good morning, everybody.
You know, I'm going to start on the bias chart here in a minute, and I'm going to get through the analysis part of our morning. But before I do, I want to ask if there's anything that you wanted to say or any observations that you might have made before I start on my quest of going through all the major currencies right now.
Sure. Really, one thing I want to talk about, which is the pound. And we saw today the pound rallying against most currencies, and people are asking themselves, what's happened, what's changed. The main, I think, the main trigger was Broadbent of the Bank of England, who basically talked today and said that COVID has exerted less than estimated pressure on inflation. And he spoke about negative rates as well, and actually distanced himself from them. So basically, if you look at short sterling, the 3-month interest rate futures, a year from now, or basically end of 21 to 22, we price in roughly 10 basis points of cuts. So slight negative rates, and I think that at least that was what we were pricing yesterday. We were 100.8 or something like that. There you go. I used to be a market maker in these, so I've traded them quite a bit. And we priced about 10 basis points of cuts. I think we might not get them. Obviously one person doesn't make a difference, but we always want to hear what the Bank of England members are saying. And also, if you guys remember, I've been, ever since late December, when the Brexit agreement was done, I said, look, I think in the medium term, this is going to be bullish for the pound. Maybe not medium term, but I think for the next year or so, because of all the uncertainty that's gone away. And yes, there are going to be problems in the borders, and we read about, in the Channel Tunnel and in the Channel in general, there's queues and miles. Yes, there's going to be problems, of course, but eventually we're going to end up with some kind of normality, and things are going to continue. And in the end, the mere complete, the completeness of basically the whole Brexit saga is done. Now we can move forward. And the other thing we need to remember is that COVID in the UK is, and I have friends and my brother who live there, they tell me it's pretty bad and lockdowns are pretty strict. But the markets are pricing this in already. We know that it's going to be difficult in the UK and everything. So I think that there's still quite a lot of negatives priced in, which may not continue for a lot longer. So that's why I have a bullish view in the pound. And I did get long pound New Zealand, roughly where we are now, actually a little bit higher, 190-ish or something like that. 190. And we did drop to like 187. I am notoriously early in my trades, but I still think
it's funny. I'm actually notoriously a day or two early too.
Yeah, there you go.
The way it is. When you take a bigger view, when I'm trying to take if I try to take a stance in the market, I'm usually a couple of days early. That's just the way it is.
Yeah, and vaccinations in the UK, just like Sansi is very correctly writing, it's going relatively quickly, and Sansi is saying vaccination rates are going to have all over 70s immune. I don't know if they're going to be immune, but they're going to be taken care of in the next 2 months. So things might move forward a little bit better than expected in the near future. Obviously, there's going to be fluctuations, but I think the pound is probably a good buy against the majors. I would probably exclude the dollar. I don't want to go long cable because I think the dollar is going to see a leg higher in general, maybe a short-term one. But anyway, that's my view on the pound and the main thing that I wanted to say today.
Okay, well, you know what? I'm trading the sterling against the Aussie myself. And Dale was saying I wouldn't want to short the pound here. He said that earlier. I don't know if you're listening in, Dale. But this is a trend line that we are pushing right now. And, obviously, if you got ForexAnalytix, you got an update on that just a little while ago as we were attacking that level. That's going to be key today. And I'm going to have to write that down for our bias chart at 136.10. And 136.10 is going to be resistance. I wouldn't want to. The only reason why I would want to be short is if we actually reject this area. But as we're going into right now range trading in a lot of these currencies, and we saw that yesterday with the bias chart. So, and you can see we're right at the 618. That's why it's so important. Hold on 1 second. I didn't mean to do that. But if you look at yesterday's bias chart, you'll notice that we're flipping a lot of them to range. There's a reason for that. And it's important to understand that we are. It's not oh, hold on really quick.
Done.
Okay. Sorry, guys. Just, okay. Just had to shore up a position there. All right. So we're going to a bias or a range bound bias for a lot of currencies, and there's a reason. And you know, as we get into ranges, you have to be more, you know, just adhere to you know, retracements. Remember, we're in a range, and let me point this out for traders. Okay, and this is why there's some very general numbers here, and I want you to just think about this. We're in a range probably 80% of the time, roughly, you know, 75 to 85% of the time. We're in a range. There are the 20% or 15% times that we blow up into a trend or blow out into a trend. That's when traders get smashed. Most traders get hit in that 20% of the time because they continuously fade. So if you don't realize you're in an uptrend or in a downtrend, that's when you get rolled over. That's why, you know, that's why so many traders have gotten hurt during, you know, the move higher in equities or the move lower in the dollars, because their natural tendency is, you know, because traders are like, okay, well, most of the time we're just range bound, so I can just buy the dip or sell the rally. But you can tell one of the big benefits about doing the bias chart for us is that you can tell when you're flipping into a range again versus, you know, getting out of a strong trend. And when you get into a range, you can go, okay, well, you know, now I can fade. Fade moves a little bit easier, and it tends to be a little bit easier for traders when we get in these environments. So anyway, now does that mean that the cable can't break out? And I'm going to just say this just to confirm what Dale said, and you know, kind of what Stelios is saying too. I don't really want to short the pound. I know we're at resistance here, but I'd rather, if I'm going to play the dollar long, I'd rather play it against something else, you know, like the Aussie or the Kiwi or something like that, not against the sterling. Okay. So anyway, hold on really quick. Okay. So anyway, there's the pound, and let's figure out what the support is. Support's going to be down here, 135.30. This is intraday, guys. 135.30. Euro. So the euro, one of the things about the euro dollar, do you remember what support we wrote down yesterday? Support at 21.25. We came to 21.32. That is the 161% extent. If you don't remember why, let me refresh your memory. It's the 161% extension of this move, right? And it's also the 78% retracement. So why that's so important is because now the euro dollar is setting up a bear flag pattern. Huh? Yeah, bear flag pattern. So that bear flag pattern now points to 120. So for all of you guys are like, oh, Euro's got a lot of support here, I want to be bullish. You better be careful, because if we break 21.25, it's going lower. And you'll hear me say this quite a bit. What does not go up usually only has one other direction to go. So if you watch the sterling go up overnight, you've watched the Aussie go up overnight, you've watched even the Kiwi caught a bid a little bit, and here you are along the euro, and then all of a sudden the Aussie comes back down towards 77 cents, pound drops back towards 135.50. You're going to be like, holy F-bomb crap, I'm going to get out of my euro longs. Do you know what I'm saying? So you guys can try to get long here. I wouldn't want to be long if it drops below 120, 125. All right. Now for me, just so you guys know, if you're ForexAnalytix subscribers, I've been short since 122.50. And I've already adjusted my stops to break even. And I'm targeting 121 and lower. I'm still actually targeting 120.50. But I'm making the adjustments as we go. So just so you guys know, you know, if you're with ForexAnalytix, you've already been playing that to the short side. Again, you know, it looks like it's not going anywhere. It looks like it wants to break down. All right. So one resistance right now is going to be 122.10. Aussie. So the Aussie dollar, we had an inverted head and shoulder pattern yesterday. Tried to play out to the upside. You see the 618 right here, 77.48. I had a sell order at 77.39 where I shorted the Aussie while I was napping. I call it napping because I really just don't sleep right now. So 77.50 should be resistance. Support is at 76.60, which is the 88% retracement. That held on that spike lower. That's the Fibonacci line in the sand, meaning if we break through that, we're probably going to do a bearish throw over and we should end up being down at, 75.50 or something down there in the next, week or so. So support or resistance 0.7750. I'm taking us out of bullish. We're going into range. Support is 76.60. Kiwi, bearish breakdown, bear flag. I'm just going to do this quickly. Okay. 50% retracement. Horizontal support is holding for now. We break below 71.50. The wheels are going to come off the bus. We're in range out of the bullish trend while we are below 72.30. Dollar Canadian. We had a hell of a squeeze yesterday. I hope you guys weren't short. We held the 50% retracement. That is support today, 127.30. Resistance, we're in a range. 28.36. Dollar Swiss. Oh, what did you say? That's a bullish pennant setting up? It is. That points to 89.90 breakdown point, and you guys go ahead and short that if you want. Support 88.60. US dollar, Norwegian krona. We break out of this down channel. I know Steve is short, and I know Stelios is too. This is scary if you are short term. Long term, I think the US dollar, Norwegian krona is probably going to reject. I mean, as long as stocks don't implode, we'll probably end up rejecting that. But if stocks do implode, again, hey, look, everybody's starting to shut down. China's shutting down. UK's shutting down. We have a new president coming in. Who says we won't shut down? How about if we get some civil unrest in the next week or two, and we have to go into some sort of martial law? That's Dale's scary words, right, Dale?
If there's enough unrest throughout the country, Yeah, in fact, it's interesting. The one who incited this will be the one to um, invoke the Insurrection Act, or there's something called an executive order, something that was passed in 2018 that gives the president executive powers to call a state of emergency. And, you just have to, if you see what you saw in Washington and multiply it by 50 throughout the country, that would be a good enough excuse for
Yeah,
it, don't you
yeah,
think?
I do. And so I guess the point I'm trying to make is, do you think that that can't happen? I mean, let's think this through, guys. Like, as a trader, I'm not here to tell you what's going to happen. I'm here to prepare you for what might happen. Because you don't know what to do when the poop hits the fan. When the poop hits the fan, and you're going, oh, what am I supposed to be doing right now? That's when you get killed in the markets. Okay, so whenever, if you're sitting there and you saw what happened last Wednesday, and you were in my camp, like, there's no way that's ever going to happen. I didn't think that would ever happen. Well, now we got to start thinking, well, how about if that happened 50 times on the same day in every state capital? Do you think that that's not possible? I know that you're going to be like, oh, well, everybody's on guard, and there's going to be, armed people, and, there's going to be the National Guard everywhere. Yeah, true. But in an armed society,
It's tragic. Lost you, Blake.
Did we lose
I mean,
Blake?
I keep a 9mm at my desk. Why do you think I do that? Why do you think it's not in my? What do you think it's not in my safe? Because we live in a crazy world.
Scott Henderson is saying apparently the Insurrection Act was signed yesterday by Trump.
I don't even know what that is, but
Yeah.
You do, Dale. But the thing is you have to be prepared for things, right? And I'm not saying that I also went and bought 14 tons of canned food,
Okay.
but what I am saying is, in the markets, we have to be aware of what could happen. So that's why when I look at like the US dollar, Norwegian krona, and I'm like, look at this down channel, man, let's say something happens. I mean, I don't think we're going past 880. I don't think we're going, or 880, yeah, which would be this downtrend line. But look, if the poop hits the fan, we're probably going to see 950, if not higher again. So you got to think about that, especially after what happened last week. I'm not, I'm more, just kind of, radars up now. I can't wait to put my gun back in my safe, or up by my bed. I can't, but you never know. You never know, right? So as traders, we have to be prepared for those types of things. All right. So anyway,
just don't shoot your screen.
You know what? I'll tell you a little joke about, joke. Okay. So I'm going to put it back on the video here. And guys, just keep in mind, I mean, I'm straight up right out of bed. So just, if you're looking at his hair or my hair going, oh, what's wrong with his hair? So, when
Your
I was,
flat top looks good, man.
Guys, by the way, I was just reading a Reuters article a few hours ago. Donald Trump has not invoked the Insurrection Act. So
okay, I didn't think he did either. But
yeah.
So I was, when I was in the Marine Corps, we were down in Guam, and we used to carry pistols because we're guarding nuclear weapons. So you carry, you got your rifles, and then if you're the duty chief, you carry a pistol, right? You have it on your, we had a chest holsters and whatnot. Well, you know, you get so bored. It's like 4 o'clock in the morning, and you know, this one guy, he was doing a round check, and he's like this. He blew his hand off when I was sleeping, and he was on duty. He chambered around and blew his hand off. Well, blew a hole through his hand, not his hand off, but you get what I'm saying. Can you believe that? People do the damnedest things sometimes.
He must have woken a few people up, right?
Well, he was we were in the berthing area where we were sleeping. He was on the other side of base, but when all the like alarms sounded off and paramedics started, I mean, the naval base sent the medics up, and it was kind of crazy.
There are people that have blown off more irreplaceable parts of their bodies. So
yeah, I mean, yeah. Fortunately, it was into the wall. But yeah, it was. I mean, yeah, if he was, you know, I think it's because he was leaning back in his chair, and I'm still friends with that guy on Facebook. When Facebook first came out, we, you know, a lot of us Marines, we reconnected, and that guy, we were, you know, friends on Facebook. I haven't been on Facebook in 7 years, maybe, but I remember like, like looking at his picture. I'm like, I wonder if his hand's completely healed. You know,
he can sit when playing hide and seek with his kids because he can see through.
840.
only you, Steve. Only you could have come up with that one.
It's not funny. It's not funny if it happened to you.
Yeah, but to be honest, you know, it wouldn't be funny if it happened during war. But you know, that was a kind of a stupid way to blow a hole in your hand, right?
Well, what it did, it didn't go through his hand. It just took off like a piece of the bottom of his hand. But it's, you know, it was, I mean, you know, I still to this day, we're like, because we try to replicate it with dummy bullets, and like, man, he was really messing around with that. I mean, you know, anyway. Okay. 90. I'm still looking at 91, 90, 91. We're back in range here. Sorry, guys. Got off on a, you know, just kind of. Hey, this is Tradertainment too. Dollar yen. So the dollar yen's holding, and with yields ripping, and by the way, yields are at highs of the session. Here, let me take, this is just so you guys can see. This is like some of the curve here. You can see this is the 5, 10, 30-year yields. And you can see the yields are near their highs of the session, right? So you got to keep that in mind, because if yields continue to go up, it's going to eventually, I think, allow for the dollar yen to break higher. So 104.80 and 104.40, that's resistance. And any dip back down towards, we dipped yesterday down to 60, but I'm going to say today, 103.90, if we can get down there. There's going to be a lot of buyers down there because they're looking at yields right now, and they're thinking the exact same thing you are. Holy crap, I don't want to be short anymore. That's exactly what they're thinking. If they're short, sorry. Dollar Mx. So the Dollar Mx, it's come back a little bit more than I'd hoped, but I'm still long. If you guys don't know why I'm long the Dollar Mx, let me refresh your memory. And I trade a core position, by the way. When it spikes up, I have to get out of some because I know it's so wild. But if you guys want to see why I'm long, let me pull it up for you. Hold on. Okay. So this is an example of what a Wyckoff pattern looks like. Let me all the way over here, and then I'm going to do some drawing so you guys know. Okay. Right. You see this right here? That's right here. That right here is that right there. This right here, that right there. Dip to new lows is right there. Then we move higher to right here. Then we come back and retest. That's where we're at now. And then we should break out and then eventually get a distribution somewhere else. Does that make sense? Okay, good. All right. So support, dollar Mexican peso supports 1985. I had orders down there trying to add. I just, haven't gotten hit yet. So like everybody else, anybody else, I try to take the position of somebody who's short. They're like, I don't want to be short. I need to start covering on dips, and I'm trying to be long. And so I'm trying to buy on dips. I'm trying to get into that mindset because, you think about this, the Aussie has done this, dollar Mexican peso has stopped going down a while ago. So people have been piling in long emerging market currencies when the Aussie's been going through 75 cents and whatnot, and they're not getting any bang for the buck. So when they have to squeeze, when they have to get out, they're going to get squeezed. So resistance right now, 2010. Gold, let's see, gold. So if you're long gold, you got to be looking at that right now, all right? 1865, 1820. I'm almost done, guys. S&P is still bullish, but what did we do yesterday? We really respected that support, didn't we? Because if this breaks, I'm going to put asterisks next to it. I don't think I put asterisks next to it yesterday because I was like, okay, well, that's support. 37.80. We went as high as 38.18. I know yesterday I wrote 38.10, but I'll write 38.20 today. It's bullish for now. All right, guys, there's your bias chart. Steve, Stelios?
Yes, mate.
Hello.
Hi.
Is it me you're looking for?
What do you think I was going to say? You had
I can
me
see it in
high.
your eyes.
You had me at
Stelio,
high.
go on.
I can see it in your smile. Yes, I know. You had me at hello. Yeah, I like that.
You had me
Yeah.
at hello. All right. Anyway.
You're all I ever wanted.
Oh, God. All right. So I'm going to pass it over to you guys. I hope everybody has a great trading session. Remember, if you haven't taken advantage of the ForexAnalytix New Year offer, do it now because it only stays there for a few weeks and then it's gone. You won't see it for months. And if you want to be with me and the rest of the team in the chat room, especially like Amanda and Polly, well, because Polly, you don't hear him because he's during the European crossover. Amanda, she just doesn't like to use her voice. But if you want to be in the chat rooms with us all day, this is where we're at. And I'm gonna show you just kind of an example of I got up 2 hours ago. Okay. No, I got up 2 hours ago. Oh, here. Oh, no, here. We're still chatting. Yep. There it is. Oh, I'm still, I'm still up. Oh, wait, hold on. Okay. I got up somewhere around here. Oh, there I am. Good morning, everyone. 4:38 a.m. my time. I was up before then. This is when I jumped in the chat room. That was exactly 2 hours ago.
The chat room the patterns in play, the analysis, the extra webinars, all of them are really good reasons for somebody to subscribe. But perhaps, Blake, we should also give a little of a heads up that in the not so distant future, there's going to be an extra reason.
We'll talk about that later.
Okay.
We'll talk about it later.
Okay, mate.
Yep. All right, guys. Have a great one. And remember, if you want to try to get ForexAnalytix for free for a couple months, for a few months, go to our Forex sponsor. Pepperstone Securities is our webinar sponsor, but you have to use this link here to open your live trading account. You can open a live trading account, get a couple months for free, do 5 lots of trading. That's 500K, and get another couple months for free. I think you have to do it within a couple months of time.
No, I don't. I don't think there is a time restriction. It's just that, you know, if they do cumulative like 5 lots within the 2 months, then the other 2 months are just consecutive, you know, with the first 2 months.
All right. So great, guys. I'll see you later. Thanks everybody for tuning in. I'll see the rest of you guys during the daily roundup today. For those of you that are ForexAnalytix subscribers, I'll catch you guys up on what's happened and what we're looking for in Asia. Talk to you guys later. Bye.
Thank you, Blake.
Bye-bye, mate.
Hello, Steve. Hello, Dale.
Ziggy says, I know what it is. Steve is going to give everyone a cut.
True. Yes.
Ziggy knows me so well.
Ziggy is one of a kind, that's for sure.
Yeah, indeed.
Okay, so we talked about a few things today. I think bonds is something we need to. I know Blake talked about them, and in particular treasuries. You know, yields are going higher. And remember, the last before COVID, the last kind of proper leg lower in risk assets came from rising yields. So we have to remember that. And I think resistance in 10-year yields in the US is probably somewhere around 130, 135. We're not that far away. Like
here are the yields, by the way.
20 basis points. Yeah. And so, you know, it's not, there you go, that blue zone, it's what, 140, is it?
Yes, 140, yeah, okay. 142, yeah.
There you go. I think that's the next resistance. If that breakout is real.
Although, Stelio, to put things in context, just look at.
Yeah.
I mean, it looks, if you zoom in, it looks like a decent move. But if you zoom out to see like the end of November of 2018 highs, and where we are and how much we've retraced, it's not really, you know, that big of a deal, right?
Yeah, it's noise. And to be fair, central banks, the way they're buying everything, I don't think, at least for the short term, I don't think they're going to allow yields to go up and stay higher. But eventually, I think we all know that you know, they can try as much as they want, but it's going to be inevitable in the end. The question is it going to be in a month, a year, 10 years? Who knows? But at some point, it's going to be inevitable. But yields are going higher, and you know, for people who have been long equities or long risk assets, you know, it's been a good trade. But this should ring some alarm bells. And so, yeah, yield is definitely something worth looking at. And we talked about the pound,
31s, by the way.
Yeah, we talked about the pound. Cryptos are very interesting, because they've gone back to like very, very high volatility. They had some massive weeks, but then, you know, we dropped, what, 20% Bitcoin in a day. It was up 4% earlier today. It's now down 5%. So it's very volatile, you know, and the people who do trade cryptos, I take my hat off to you. For me, it looks like a complete gamble, but obviously people can trade them. And, you know, you have bigger cojones than I do. That's for sure.
Yeah, I have a different interpretation as well, Stelio. It's less polite, but whatever. Yeah.
Okay. You can make money for sure trading.
Oh yeah, you can. But you can also lose a lot of money. And, you know, for me, the fact that, you know, I wrote it to you yesterday, JP Morgan came out with a target like they think Bitcoin is going to $146,000. I just need a single person to explain to me how you can come up with that shit.
You mean
I
the
mean,
exact number and not 150 or something?
yeah, why 146? Why not
Yeah,
142? Why not 200? I mean, for me, any number makes the same sense, zero. But I mean, how
They just did
exactly can?
some
Yeah,
technical analysis, did some extrapolations, or you know, some whatever, and did it anyway.
yeah. It reminds me of the book that came out like what was it, 30 years ago? Dow 35,000. You remember?
Yeah,
And we're still not there.
yeah. Yeah, that's. I don't have that much else to say. Data-wise, we have nothing. We have Jolt's job openings later today, but absolutely nothing of any importance. So that's that's it from me. I don't have much else.
Yeah. Now, speaking of the yield theme that you mentioned, just a small comment before we jump on the charts. You know, a lot of people think that central banks can actually, like, you know, manipulate like treasuries and yields forever. What they don't realize is that in the long term, first of all, what are the tools that central banks have? It's rates and inflation, right? By inflation now I mean the traditional definition, which is the expansion of the monetary supply. So they can print money, yeah. So they can print money, and they can toy around with yields, right? Now they've made it quite clear that they don't want to raise yields, and we know that if they do have to raise yields in the environment they've in essence helped build during the past 20 years, and even more, you know, obviously during the past 12 years during the previous financial crisis, you know, if they actually raise yields, the wheels are going to go off the bus, because we know that there is a ton of zombie companies out there, which, you know, the moment yields actually do climb up, they're, you know, they're going bankrupt. Banks are going to need bailouts again because their asset part of their balance sheet is going to implode, so on and so forth. So we know that they don't want to raise yields, and, you know, with countries being so indebted and corporations, etc., it's going to lead to a massive financial crisis, which in my opinion it's a healthy thing to happen, because inevitably it's going to happen. So the more we prolong it, the more serious it's going to be, because it's an inevitability that's, you know, bound to happen. Now the thing is the following: how do they manipulate yields? By creating more inflation, by buying more bonds, right? But the thing is that once the market participants start actually worrying about inflation, the only tool that central banks want to use to fight climbing yields, which is creating more money out of thin air to buy more bonds, is actually going to exacerbate the worries of market participants. So I think that the end game of this is going to be when inflation actually starts climbing, and market participants start really seeing that, you know, it's a thing that's coming, and central banks are going to try to fight this by doing what they've been doing. Instead of calming down the market, it's actually going to be, in essence, the pin that's going to burst the bubble. That's what I think that inevitably is going to happen. Now, as we've always said, it's one thing being able to predict how this is going to end, which in my opinion is rather easy, but it's extremely hard to predict when that's going to happen. That means that's not something you can trade off unless, you know, you're buying assets or core positions that you're willing to hold perhaps for years, right? So, you know, nothing useful to our, you know, day-to-day or week-to-week trading. Just, you know, getting it out there. Now, we mentioned yesterday, and I'm going to resume from where we left off yesterday. We talked about several pairs and how it looks like the dollar is actually now attempting to produce a rebound. Of course, I stressed out many times that it's one thing making an initial move. For example, we did see the DXY break through this channel, somebody might not even want to look at this as a channel, but might want to look at this as a wedge, right? Because you can redraw this support like this, and it's absolutely valid, I mean, until proven otherwise. So we've seen the DXY break through this. We had already seen the euro make the equivalent move here, which was, you know, a nice initial sign. Everything was diverging, having to do with momentum and RSI. It is important to mention, though, that despite what was looking to be the case initially yesterday, it's not that we had like a really big risk of move, which means that risk assets for the time being don't seem to be buying into this dollar reversal. For the time being, of course, is, you know, the key word here. Now, gold and silver did rebound from the lows, and, you know, silver importantly held this channel, and for the time being it is holding. So you know, that's also something worth noting. It is also worth noting that commodity currencies against the dollar have not broken down. What I mean by this is, take the example of the Aussie. It has pulled back, yes, but it hasn't even broken through this ascending channel. In the case of the Kiwi, copy paste, exactly the same type of thing. In regards to USD CAD, for the time being, we've stopped at this trend line resistance. In the case of USD NOK, which I mentioned yesterday, since I have a position, look at this channel. We tested it at the highs of the day yesterday. Have we broken higher? No, we haven't. In the case of multiple of these pairs, I see the same thing, meaning, yeah, the possibility of some type of a reversal. Is it yet confirmed? No. Especially commodity currencies and risk assets have not rolled over yet. They've pulled back slightly, but there is nothing that really, you know, has done big technical damage to what we've had so far, which means what I said yesterday, you know, one day does not constitute like a key reversal to a well-established trend. So I would once again today advise for more patience before you can, you know, just bet that, you know, things have reversed here. By the way, another one I forgot to mention is USD Mxn, more or less the same deal. What I have been monitoring here with USD Mxn is this previous channels broken trend line support, which is still managing to cap the rebound and is acting as a resistance, right? So as you see, it's not like one or two, it's like several currency pairs that more or less show the same thing. So in essence, the only thing that has had some technical damage done to it is the euro. And since we know that the DXY is very heavy euro, it's like 58% of the index is the euro. That's why it has done the exact opposite move. But the rest don't seem to be following through strongly yet. So in any case, I would, you know, expect that we need to wait a little bit more before we can say that something has, you know, really changed here. Now, since we talked about USD CAD, another pair I wanted to show was CAD Yen. I actually wanted to show it during the past couple of days, trading days, I mean, but I think I forgot both on Friday. I definitely forgot to mention it yesterday. And why is that? Because it has built here an interesting information. We have been trading in a little bit longer term ascending channel. You can clearly see it here in red. But within that, we've actually built a flat top triangle, which in essence is a formation that shows that the pair is coiling. It is obvious that this 82 area is, you know, key resistance. So I do think that 82 is interesting from a trading perspective, because if we do break through 82, I think that clearly opens the door for a move towards the channel's trend line resistance, the longer term channel's trend line resistance once again. So I do think that a breakout from 82 is probably a nice buying opportunity for somebody that's interested in such a trade here. Now, having to do with another thing I wanted to talk about, we visited it yesterday. Natural gas seems to be finally making the move. I mean, it had broken through this channel, and it then spent like 3.5 days like bull flagging probably on top of the channel's trend line resistance, and it seems to be moving higher once again. Very nice outside white candle yesterday, quite a nice bullish candlestick. We're retesting this 290 support resistance area once again. I think it looks good. I think it can really extend higher. Now, having to do with crude oil, exactly as the risk assets did, it pared back a decent part of its losses yesterday, and it has printed a higher high already today, on its way to the next upside objective, which is the confluence of the 78.6% fib and this horizontal support resistance area at 54. As I've said before, I really see no reason why you would want to fade this. At some point, it's going to correct lower, but people have been waiting for that for so long, and the only type of correction we had here was this, which was a textbook corrective move. We talked about it back then. It was a perfect channeled correction. Even the day that we bottomed out, we did it leaving behind a very, very characteristic reversal candlestick, right? It was a key reversal on the daily chart, and we never looked back since. So, in my opinion, don't try to fade it until something conclusively changes. Now, gold and silver, I don't have much to say. I already mentioned silver very briefly. Gold still testing this 61.8% fib. Still looking rather heavy. I think it can correct even lower. But, I would hold a little bit my horses as long as silver at the same time is holding above the broken channels trend line resistance. In any case, that personally myself, I don't want to be short the metals. I only want to be long the metals. Not at any price, but I'm only looking towards one direction to trade them. So you want to short them, go ahead and do them. I do get the argument that gold might and silver might correct lower, but in my opinion, in any case, these are corrective moves, and eventually they're headed higher, much higher. Now, platinum in the same manner, although it printed a higher high, which silver didn't, as silver is backtesting the broken channel trend line resistance as support. I also think that platinum is headed much higher eventually. Palladium still consolidating in this long-term symmetrical triangle. Copper, I mentioned yesterday the importance of copper and it testing this ascending wedges trend line support, and guess what? It didn't break down, at least not yet. So breaking down from here, it's going to be a very nice technical development, and probably going to lead to a proper correction, which we haven't had in a long time, and likely it's also going to point to risk assets correcting lower, but we haven't done it yet, right? So I'm paying close attention to it. I think it's an important market with important correlations to keep an eye on. Somebody's asking about the SPY. Let's have a look at the S&P 500. It's exactly the same thing. I mean, yeah, they're counted differently, but the formations and everything else is exactly the same. So finding resistance at the 161.8% extension of this corrective move lower, has broken above this ascending wedge, and technically speaking, in order for me to start looking lower here, I need to see a move below 36.90. Why? Because that's at least going to be, a short-term lower low, which we haven't seen in a long time. And until or unless that happens, I do understand all the arguments. We're very overbought. Fundamentally speaking, valuations are completely stupid and all that, blah, 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 blah. I agree with all that. But technically speaking, and this is a market that cares mostly about the technicals and what the Fed does, there is no real reason to try to fade it, right? Not yet. I mean, no indication. There are some signs that it might finally start producing a pullback, but no technical damage yet. Dale?
Yeah.
I'm assuming it's time for the interview.
Yeah, good awareness. Okay.
Yeah, I just heard you breathing
okay.
down on the
Yes,
microphone. I said,
we're fortunate to have Kevin Wadsworth come in, and like in the NFL Next Man Up, Kevin agreed to come in here today, and I'm going to get him set up now. Kevin, thank you so much, and I'm going to make you a panelist, and then we could have a little conversation. Hope you've used Zoom before. Welcome to Face, Kevin Wadsworth. Asking you to unmute. It's a drop-down menu there.
Yeah, I've got it. Thank you, Dale.
You've got it, Kevin. All right.
Great to talk to you. Sorry about the technical glitches there, but yeah, thanks for inviting me on. Great to talk to you.
It's really, yeah. See, I told you that it would all work out and we'd get you in here. Do you want to share your screen? It's that green box on the drop-down menu.
I can, yeah. Okay, just bear with me and I'll do that.
So, before we get into the markets, and I saw a real interesting, lot of work on a tweet where you were showing saucer bottom in gold and maybe a cup and handle forming. But usually, I take people back to, how they got into the business, knowing a little bit about your background. Was becoming a meteorologist, when did that become your aspiration of something that you wanted to do? Were you a young guy or?
It's one of those things. Living here in the UK, we get just about every different type of weather coming at us from all different directions: snow, wind, heat waves, all that kind of stuff. And it just caught my interest. And a little bit of fog.
Yeah.
No, as a kid, I was interested, and as I grew up, it became a little bit of a hobby of mine. And one thing led to another, and I wound up getting a job for the UK Meteorological Office, and that's where I've been ever since. Many years working as a forecaster for military and civilian customers, Royal Air Force bases around the UK, and also delivering forecasts to the civil contingency community now. So a little bit of broadcasting, a little bit of radio and TV thrown in at times as well. So yeah, it's all been good.
So is the forecast in the UK heavily COVID with
we got scattered outbreaks of COVID, and
maybe the rain will wash it away. Kevin, I've known people that were meteorologists, so I have to ask you if this is how trading happened to you, because a lot of the meteorologists that I followed earlier in my career were grain traders, and they or some type of agricultural product, because they could see patterns developing and know about La Nina and El Nino. Were those markets one of the first markets you tried because of your background of forecasting weather?
No, I fell into this through the financial crisis, and sort of around about the early 2000s and leading up towards 2007. So I fell into it looking at gold in particular, and looking for somewhere to invest my my hard-earned money whilst not really trusting the financial institutions. So that's where my interest started. Yeah.
Okay. You can't eat gold though. You know that, right? All right. Anyway, Ken, I told you we'd have some fun. So I believe this is kind of the look that you were. That wasn't the exact tweet, but so you're viewing this current level here in gold as important support, and if it gives way, we could see 1700. Am I interpreting it right?
Yeah, that's right. We're in a downtrend channel with gold, and we had what was sort of quite widely sort of touted as a breakout. But I think I said in one of my tweets that we needed to close the week above that declining. Well, it had turned into a support line, hadn't it? But of course, we didn't close the week above that. We returned back under the support line. It's now resistance, and we come down to the supporting moving average there, 200. Moving average, and we're kind of bouncing off that. It sort of coincides with the inclining trend line as well. I've got marked in red there, so there's a clear sort of area of support and some horizontal support in there as well. So that kind of zone where we are now, it's providing some support. If that gives way, then quite clearly it's down to the bottom of the channel, which may coincide with a dotted red line there somewhere around the 1700 level. So I think, as your previous guest there was saying, it's a little bit of a case of, the jury's out at the moment. It could move up from here and break out. Could just as equally have one more plunge in it. So I think some of the cycle analysts are looking to see another daily cycle before delivering the verdict.
Okay, so is this a time frame that you come up with your ideas and then drill down to shorter term TFs for entries and stop levels, or do you really just trade off a daily? Some people still do it.
No, well, so if I just pull up a chart here for a sort of longer term picture for gold, and I'll just give you an idea of what I'm kind of looking at and how I'm seeing this. I mean, my basic starting point is to be on the right side of the trade in the long term. So where we're looking at the long-term trends, long-term trend analysis, and that's where my weather forecasting experience and background comes into all of this. So this is a chart that I've been developing on Twitter over a number of.
Oh yeah, that's the one I saw. Okay.
This took quite a lot of work, and it came out of a realization many years back that, of course, all of these things have trading cycles. There's nothing new in that, and gold happens to have an repeating 8 and 16-year cycle. And that coincides very nicely every 8 years with the elections. The intermediate election years are marked on here as well, but we get an election low, if you want to call it that, an 8-year cycle low every 8 years, as they're numbered here: 1, 3, 5, 7, 9, and of course we've just moved through the latest election point here. So 11 was an 8-year cycle low, and the next one's due at point 13. Put the number up in the right place. So point 13 is in November 2024. Now, the intermediate 4-year elections, they can occur during an uptrend or a downtrend. And so what's happened at point 12 is midway between those two 8-year cyclical lows, and we were pulling back into the election. So history sort of leads us to believe that if that's the case, then the next move is going to be upwards into the point just ahead of the 8-year cycle low, and we plunge down into that low, a little bit like we did here at point number 9 in the 2008 financial crisis. It wasn't it, that coincided with the election low there. So and these arcs are very common as well. They occur over different time frames, different commodities: gold, silver, individual stocks, even Bitcoin. In fact, especially Bitcoin, as it turns out. So you can trade off these arcs. Once we get a hit on the right-hand hemisphere of the arc, you become much more confident that the arc is in place and is going to continue guiding you all the way to the top, which is just what's happened with Bitcoin and Ethereum, Litecoin, and many of the other cryptocurrencies as well. And these arcs are incredibly reliable, as it turns out. What happens as you exit the arc? Well, that is variable. You can develop a handle, or you can just develop a small pullback and then accelerate upwards, and that depends where you are in the cycle.
Okay.
And that goes back to a little bit sort of analogies with weather forecasting as well, a little bit like the seasons.
Okay, that is interesting. So here we are in winter, and you're looking for this saucer bottom to put in some type of handle here before we explode, or we could just go at any time. What would give you the confirmation that we're on our, well, it looks like you're looking for it right here from these levels. So what would constitute a breakout? New highs over 2070?
Yeah, so what we need to see is a move above this sort of channel, and as we mentioned, silver has moved above the channel, and in precious metal bull markets, silver very often leads gold out of the sort of bear market lows, and silver junior miners have been very much doing that over the last few months as well. So we need to see this move just above this sort of trend channel line here, and this sort of zone around about 1930 would be of interest. It's a horizontal sort of area of resistance as well, and that would lead us up towards the that psychological 2000 level, and would start seeing 2000 as a support line rather than a resistance. So that's what I'm looking for, to confirm that we're not going to see a deeper handle forming. It's not unheard of to see these handles pull all the way back to 30, 40, or even perhaps 50% of the entire move from the bottom. But that tends to happen when you're moving in towards a major cyclical low, so an 8-year cycle low. So if we had the 8-year cycle low coming up in 2021, 2022, I'd be looking for this handle to pull all the way back down here and then accelerate upwards. That's not the case, though. The low's not due until over here in 2024. Lots of time yet to move upwards and accelerate upwards over this year, next year, and quite possibly the first part of 2023 as well. So I'd be optimistic, and I would lay the odds something like I suppose 75 to 80% probabilities of breaking outwards and upwards during the next month or two, leading through into the summer. And only probably around about a 20% probability of seeing this handle pull back down below the arc. And this is the key level here, where we see the cup or the arc sort of support level around about that 1700 or just above. If we pierce through that, then that changes the picture completely, and we could see something pulling back down towards the 1500 level. But that's not my expectation.
Okay, so 1700 is kind of your bull bear line.
It is really, yeah.
Okay. Any other asset class or instrument that is part of your bailiwick?
Yeah, keeping a close eye on platinum over recent months, and waiting for a signal that the trend is changing. And all of these, by the way, are signs of a developing commodities bull market. We're seeing multiple breakouts across multiple sectors. Copper is one, platinum is another, and uranium is another. This is the platinum chart, and it's really a very simple chart. Don't really need to add too much to this, really. We've got a simple breakout on the log chart for platinum, with a nice convincing candle moving straight above. Back, if I get the line in the right place, that's a back test there, just ongoing at the moment. So we're on the right side of that line. It's acting as support now, and I expect to see platinum moving considerably higher again over the coming weeks and months. I mentioned uranium, and uranium futures is a chart that I've been looking at very closely, because I'm quite heavily invested in the uranium miners at the moment, and they've not been doing too well over recent years, but of course they've moved up very nicely now with breakouts with firms like Cameco, GoviX, Fission Uranium, Energy Fuels, all doing extremely well. And I think I'm well over 100% up on all of those, bought in at the breakout. And this is what I'm sort of using as my roadmap, if you like. And I think it's really important to have a roadmap so that you know when to get out of the trade, because getting in is one thing on a breakout, but you have to time your exit very carefully as well. It's no good if you give back 50% of your gains or even all of your gains. So what we can see here is a very cyclical nature to the uranium market over the last 3 or 4 years. And there's a peak sometime during the sort of winter months of the year, sort of November, December through to around about February. So at the moment, we're in that uptrend sort of spell where going on what's been happening with this channel, and I accept the point that we broke out of the channel there, but in general terms, this is a rising channel. So somewhere up around the perhaps 35 to 38 sort of level, depends on the angle of ascent, I suppose. And as we get towards the psychological 40 level that I've heard a few people talking about as well, we're either going to get a rejection or we're going to get a breakout. And a breakout here would signal really, big things.
Acceleration.
It really would, yeah. Yeah, because if you look at the long-term chart, if I just zoom out a little bit, you can see just how much the uranium market has been pummeled over recent years. It's way down. So really important decision point coming up in a few weeks' time for uranium. But I've been
Do I
tracking.
I need a Geiger counter when I'm looking at this chart?
You'll need a Geiger counter if it breaks out here, because the whole thing is going to go radioactive.
I've had enough radiation in my life. It's part of a cancer treatment. Anyway, so
really?
yeah, so uranium. I'm getting more and more people talking about it for the last year. So it's definitely becoming not as esoteric. So I'm very interested in your look in the dollar. I'm glad you pulled it up. So why don't we wrap it with what you're seeing here? You're looking for a dollar low in 2024 or so as well.
Yes, so the cycles all tie in, of course, and this is a chart I've been working on for many years, actually, Dale. I think several years ago when I first put this chart out there, it was met with a lot of skepticism, and everyone was looking for 160 on the dollar index. I'm a charts guy. I'm a sort of meteorologist who finds patterns and spots patterns and repeating cycles, and I don't look for the fundamental arguments to support the pattern, because there are so many arguments for and against the dollar going up, the dollar going down, milkshake theory being one of them, of course. And
what is that milkshake theory?
Just don't ask me. It's a theory that involves dollar demand around the world, and how dollars come back to the United States, and all.
That's okay. That's a bullish argument for the dollar milkshake.
Yeah, it is. It is a bullish argument for the dollar going, 120,
skyrocketing,
that kind of thing. Yeah. So, but the chart just doesn't support that. We're ignoring all of the crazy arguments and well-reasoned arguments. We've got a very repetitious cycle since the 1970s, when we came off the Bretton Woods Agreement. You can see how the dollar settled with a cyclical bottom here in the early 90s. It then peaked and formed a domed top, and then it bottomed again, forming a domed bottom, and then it peaked again, forming another arc. And this is the one that was controversial. A lot of people sort of thought this was, pointing up here somewhere. And we briefly just pierced through the arc there, which had a lot of people panicked, but I stuck with it and brought the chart back into circulation.
That was COVID, right? COVID?
Well, we've got the March Madness, haven't we, which is down here somewhere from March 2020. So it was, I suppose. It does.
It was a COVID spike, and now we're here at major support.
And
so if we could still have maybe a bear market rally, Kevin, if you go shorter term, maybe back to 95 before the big decline.
Yep, you can see these 10-15% rallies that occurred after we broke this uptrend line. You can see the uptrend line in the previous big dollar bull market. Once that uptrend line was broken, price tried to hang on to that line, but it failed. It lost its grip. And what's just happened here, the price has tried to hold on to the uptrend line from underneath once we broke below it. And it's acting like a magnet, just like it did back then. It's a magnet trying to pull the price back, but the forces of gravity that are pulling us down into this dollar cyclical low here are starting to take over now. So every time we get a rally, in my view, it's a bear market rally, and it's to be sold. And this is where we're heading down here. Something is going to happen in 2023. Last time we saw this bounce out of the bottom here, it coincided with the 2008 crash. So I'm very, very aware that we're going to see something not good happen around about this time frame, leading into the because if you remember the gold chart, we've got that 8-year cycle low in 2024, and it ties in with the type of bounce in the US dollar that we had here. So something's going to happen here. I don't know what. Just a heads up, something to be aware of.
And that's what, the end of 23, beginning of 2024.
And that depends how left or right translated the cycle is. But I'd be looking at 2023 as a year to be extremely cautious. Whether it's
that could be perhaps the end of the bull market in equities. up
It
there?
could be, yeah. It could be some kind of liquidity, financial stock market collapse of some sort. But
Yeah, I know
course,
some Ellioticians that have been bullish a market for a long time, and are talking like 4,600 S&Ps and stuff. And then one in particular thinks a year or two from now we'll enter a generational bear market. So anyway, that's I bring people on like you for not just to educate and edify the community, but you're also doing that for me, Kevin. I really appreciate you coming in, and I'd love to have you back if you're open to it. And do you have any kind of business model? Do you help people trade, or you just tweeting to kind of give people your views and have interaction, and you don't have a business model besides trading your own account?
Yep. So I'm doing all this in my spare time as a hobby. People can find me on Twitter here. It's at it's Northstar at NORTHST 1836337. That's my Twitter handle.
Why all those digits on your handle?
I should have looked at it more closely when Twitter assigned all those numbers to me. I think I'll probably be able to get those changed, but due to COVID, Twitter aren't helping much at the moment.
Okay, yeah, I was wondering if there was some type of method to the madness.
I've recently,
or you were trying to give your phone number out to women that are trying to con men on Twitter. I'm lonely. Huh? That's happened to you?
one thing worth mentioning. I'm really amazed that I've got this many followers. I'm absolutely humbled by the fact that it's just ticked over to 30k whilst I've been on air, actually. But I've recently joined forces with at Bad Charts and Silver Chartist on Twitter, and Silver Chartist has an incredible free newsletter, which I would encourage people to go to my Twitter feed, click on the link, and you can sign up for the free Silver Chartist newsletter. If you like all this kind of analysis, go straight there and get more detailed information for free, and go for it.
That's Patrick, right?
Patrick is helping, and this is Steve who writes the newsletter. So me and Patrick are affiliates, and we're contributing now, and we're working as a team of three to try and help people.
Yeah, for that triple-digit silver coming down the line.
It'll be coming down the line, and Patrick is getting very excited. As anyone who follows him will know.
We'll have to peel Patrick off the ceiling when silver breaks 100. So go ahead.
Great guy. He's a great guy, Patrick. It's nice to be working with him.
Yeah, well, the law of attraction. Two very good technicians, you and Patrick, and I really like your work, and really I appreciate it, Kevin, that you were able to come in here today, and I'll get back to you later, and we'll get something on the schedule for the spring, and
that's great, Dale.
See how things are happening. And thanks for giving us the weather forecast of the markets, because we're all forecasters or professional guessers. Or tacticians is the word that I like. And what happens to people that survive an interview with me?
I don't know.
You become my trading warrior brother, and you can't get out of it. You can't get out of it now.
Blood brothers, brilliant.
All right, buddy. So everyone, you know where to follow Kevin. Definitely Dollar Bear, Precious Metal Bull, and here's a guy that uses a telescope and a microscope. You need both tools, don't you? I mean, as a weatherman as well, you look at the big picture, and then you have to dial in and look at the microclimate as well.
You've got it. That's exactly it.
All right. Well, everyone, Patrick, this has been a great interview with Kevin Wadsworth, and you know where you could find him. And again, thank you so much for stepping up and being a great pinch hitter today. I appreciate it very much, Kevin.
You're very welcome, Dale. Thank you very much for having me.
Okay, everyone, that's a wrap for Turnaround Tuesday. Good hunting, and remember, don't just count your pips, count your blessings. See everyone tomorrow. You're welcome, Sonny, Tom, Laura, Jorge. I'm glad that you guys enjoyed Kevin. Adios.